let me come to you, Mr. Chokalingam. Bajaj Finserv, Tata Motor Commercial Vehicle, and the third one is Ashok Leyland. What are the future prospects, long-term view, 1 year or so?
All three are good quality stocks, particularly after the recent correction. And Tata Capital CV has, a huge investment in Tata Capital, which is again domestic play. CV business also domestic play. Similarly, Ashok Leyland also domestic play. So all three stocks have a huge exposure to domestic demand theme, and they have very good long-term growth prospects. So I would give a whole recommendation on all these three.
All right, so it's a whole recommendation on all these three. Let's move on and let's take Venkat Ramana's question from Hyderabad. He's a long-term investor holding Kotak Bank at an average price of 377. Should he hold or an exit is recommended? He wants fundamental view also if he needs to switch to some other stock, due to the war timing. All right, Chokalingam sir, I'll come to you.
It's a very good stock to buy, I believe, particularly after the recent correction. Standalone book value has contracted. Price to book value has contracted a lot, and it has got a lot of subsidiaries and joint ventures. It just started unlocking money from one or two joint ventures. There's a long way to go to unlock a lot of money from various subsidiaries, and the industry headwind is also in favor of the bank. It's a very, very attractive buy at current price, in my view.
There's one more question from him. Kunal, I'll come to you. Technical indicators really work during the war regime? That is what he wants to know. Interesting question.
Nothing works in a war regime, neither fundamental indicators nor technical indicators, because you can't fathom the extent of pain, the fear, the uncertainty in the markets. And so in markets we say that 80% of the times you are right in your forecast because the markets behave in a very natural kind of a manner. But these 10-20% of the times is where things go into extreme, whether it's 2008, 2020, 2026, 2022, Feb scenario. In those kind of scenarios, it's always better to try and wait for the markets to just about stabilize and not do too much of a hyperactivity. So I think that's one of the reasons why I believe none of the indicators they tend to work with an absolute precision in these kind of markets. So you have to wait for those stabilized phases for the markets to come back so that you can probably preempt and forecast with the average set of indicators which you tend to follow.
All right, moving on to the next counter. This is Lokesh Raj. He wants you to recommend two stocks for 1 year time frame. IDFC first.
If you like this video, then like, share and subscribe to ET Now.